Hello and welcome back to Building Wealth on the Go, podcast by KLT Wealth Management. Today is February 18th, 2025. We are back with Season 6, Episode 2 of our podcast. I'm your host, Brad Wilson, joined by my colleagues Courtney Beach and Joe Filiameni. We're here now into February. 2025 is rolling along quickly, and we're keeping up with the podcast, keeping going this year with our theme of touching on some educational topics, really important things that maybe aren't talked about as much, and or concepts that might not be as well understood or lots of information out there. So we're trying to provide some context there on what is available for clients, and things to potentially think about. So for today's podcast, we're going to dive right into the topic of the disability tax credit and registered disability savings plans. So, Courtney, I'll throw it to you to kind of give us a bit of an overview of both of them and kind of how they work, and we'll go into some planning and stuff after that with those.
Sure. So in order to get an RDSP or a registered disability savings plan, you have to qualify for the disability tax credit. And it's pretty strict on what you have to, how to qualify. I'll just give a brief overview because we can spend the whole podcast just talking about it in itself. So in order to qualify for the disability tax credit, you have to have some sort of marked restriction in one area, which is walking, mental function, dressing, feeding, going to the washroom, hearing, speaking, vision, or beyond a life-sustaining therapy. And when they meet a marked restriction, it's something you have to have for at least a year. It has to affect you 90% of the time, and it must take you like 3 times longer than it would a normal person or something that you just can't do on your own. I do highly recommend you go on to the Canada website to see if you do qualify. But that is like the overview. So if you qualify for this disability tax credit, you can get what's called an RDSP to sort of save. And it's a specific type of account for people with disabilities to save for the extra expenses that they have in having their disability.
Yeah, so I think that's a good sort of overview on that. Joe, you want to talk about sort of how the disability tax credit works and how sort of maybe what the goal is, and from an accounting background, where that can help, and he's also help maybe care providers as well.
Yeah, the disability tax credit, once you're eligible, and it is quite a process to be eligible. I think that we need to make that very clear. Mm-hmm. You have to get a doctor to sign the form. That's the first challenge. A lot of doctors don't want to sign the forms for whatever reason, but basically you got to get that form signed. It has to be completed correctly. And then submit it into CRA. Once CRA receives it and does their review on that and ultimately accepts it, hopefully, then they will actually notify you. And there's usually a start date for these disability tax credits. So it could be like 3 years ago or 2 years ago and whatnot. And CRA will then go back and reassess your tax returns and allow for that disability tax credit. So how the disability tax credit works, it's a non-refundable tax credit, much the same as all your other credits that you got. It's worth almost like $10,000 in tax credits. So it offers a significant tax benefit for you ultimately. So it's certainly worthwhile. You'll definitely see an increase in your refund. If you are applying for a minor under 18, there is the disability credit, the same disability credit, along with a bit of a supplement for the child as well. So it actually gets a boost up. So it's definitely something that you want to look into. You talk to your accountant or tax preparer. The form is easy to access online, but ultimately then it's just going through that process. Now, I should mention there are companies that will do this for you. There are a number of companies that advertise that they will prepare the documentation, get it ready, send it out, and then ultimately they get paid once you are approved. Essentially, they do the calculation. So if you really don't want to do it yourself, you can have somebody else do it for you. And but of course, then you're going to lose some. You're going to have to spend money on that aspect of it. So.
Yeah, and like you touched on, Joe, if you have dependents, if they're under 18 or if they're just a dependent of you, an adult dependent as well, that tax credit can be utilized by the caregiver, the caretaker. So that kind of helps you as potentially a caretaker, if that's your position, to have a bit of a tax break while you're taking care of the individual with a disability.
Yeah, and it should also be noted that you can spend that tax credit on whatever you want. It doesn't have to be specifically on the disability. Once it's yours to do whatever you would like to do with.
Yeah, and we should also mention too that I know recently working with some clients, some of their children, diabetes. It does, although on the form doesn't have that specifically. I think there's also a little bit of leeway for children with and I'm saying ADHD, but maybe not. It's ADHD, but autism. Yeah, on the spectrum. Thank you. So I've seen where CRA has approved in those circumstances. And the other part of this that we should always keep in mind is sometimes there's an end date to these disability tax credits. So be careful and be aware that sometimes, it might be just at a phase and there's going to be an end date, in which case then CRA will then, from that point on, disallow the disability tax credit. So you need to kind of be aware of the end date if that's the case.
Yeah, every situation seems to be different. Sometimes you might have to reapply for the tax credit or the grant, or resubmit updated medical information after a specific period. Sometimes you're given one for life where you don't need to reapply on a regular basis. So it really depends. It is a case by case basis, which is why sometimes it can see like a bit of a headwind to apply for it, because it can be a little daunting. But there are some real benefits for people who need services or benefits such as the RDSP and the tax credit. Courtney, do you want to dive a little bit into how the grant works with the RDSP? Because that's one of the great benefits as well, is not only are you utilizing the tax benefits from the tax credits, but the government's giving some grant money as well to the individuals who hold the RDSPs.
Yeah, so they kind of decide how much you're going to get in RDSP grant depending on what the family net income is. So and that net income increases every year, just like it does with many other government benefits. This year, that top is $111,733. So that's kind of their threshold. So it is a very generous grant. So you get, on your first $500 contribution, you get $3 for every $1. So if you contribute with $500, you'll get $1,500 in grant money. But then on the next $1,000 contribution, you get $2 for every dollar, for up to $2,000. So that's a very generous grant, much more generous than the RESP. But again, this is for people with disabilities. So that's why it's more generous. There's more costs associated with people with disabilities, generally speaking. If you are above that threshold, you get on your first $1,000 contribution, a dollar for dollar grant. So it's still generous. It's just not quite as generous. And then, of course, there is a disability bond for low income households as well on top of that.
We should also note that the classification of an RDSP is very, very important, in that for many of the people that are disabled, they access the provincial programs under the ODSP program, and in which case those ones there, you're somewhat penalized when you have assets and receive income under the ODSP system. That's why the RDSP was created, so that its classification is such that it doesn't disqualify them from, because you can essentially have like a nice nest egg of money sitting there, and it wouldn't disqualify them from continuing with their ODSP. And that was the whole idea why the federal government implemented this, is to assist those that were being penalized.
Yeah. And one thing to sort of note just regarding the RDSP, so there is a lifetime contribution limit. Like Courtney said, there's an annual grant, the limit that you can receive, but there is a lifetime limit of $200,000 for any beneficiary. So you can contribute more at any period of time, but you're only going to receive the grants, kind of like the RESP. You can contribute a little bit more the RESP, but on an annual basis, but you're only going to receive a grant on the first set amount of dollars there, depending on your income level. So something to keep in mind, but it is a pretty high annual or a lifetime limit. So there's plenty of room there to contribute on that plan. So that kind of gives a good summary on sort of the RDSP. Like we mentioned, it can be a little bit more of a complex topic, but it's important to sort of know what's out there, sort of some of the benefits, how it works. So talk to your accountant, your advisor, if you feel that you or somebody you know might qualify. Wouldn't be a bad idea to investigate if that's an option, because it can provide a really powerful tool to help with added expenses, added costs for somebody living with a disability. So we'll move on from that topic there, and kind of a side note of it on the disability topic is talking about disability and critical illness insurance, and sort of the importance of that, because sometimes we don't know, look at the snowstorm we just had this weekend, and thankfully I haven't heard anything but the terrifying plane crash at Pearson Airport on the weekend as well. It seems as everyone's okay, but there's lots that are injured from that. Is you don't know what's going to happen, and having some sort of coverage for instances, the freak accidents that you hope never happen, I think is really important for this. So Joe, maybe you want to talk a little bit about sort of that disability, critical illness, of what do each of them cover specifically, and why they're beneficial to have.
Yeah, like if you're fortunate to have like a group health plan, often this would be already in your group health plan. And under the disability, there may be short-term disability, there may be long-term disability coverage. Essentially, what it is covering is that you're unable to work and do your specific function. And so then there is a cash injection, and it's usually like a payment to you that you would receive, which sort of supplements or replaces, I guess, the income that you've lost for that period of time. The critical illness side of things covers certain critical, life-threatening illnesses. Now, back in the day, when critical illness came out, there was a lot more actual situations that it covered. Now, the definition has become a bit more narrow. So it is very important for you to understand what you're actually covering. It generally is life-threatening. I think we're at a stage now too with, for example, some cancers are not life-threatening anymore. We do have ways of curing people on those. So you got to know what your coverages are. And again, if you're lucky enough to have it as part of the group plan, fantastic. You can buy those as standalone products. So any type of advisor that's licensed under the insurance regulatory authority can sell you sort of policies, and you can have them as standalone products, and they'll vary in price. So it does sort of come into play in terms of your age with disability, your job title, what you do. Obviously, a higher risk job, it is going to cost you more because it's rated at a higher risk for disability. The critical illness will come into play in terms of like your health history, your family history. So that kind of comes into play. And again, your age as well. So it's definitely something that you may want to consider as part of your overall financial planning, is to have some of that. if you don't have sort of coverage, there's there's statistics that are out there that there is a greater chance that you would get a critical illness or disabled than actually dying early. So sometimes you can tie that policy into another policy with a life insurance. So there's different ways of doing it, and pricing's all over the board.
Mhm.
So our suggestion would be just shop around, speak with your advisor, make sure you've got what you need, and go from that.
I would say it's really important for anyone who's self-employed, business owners, to really look at it, because they're the ones who really often won't have a group plan that incorporates that. If you're working for a bigger company, it's almost very standard now for group health plans to have those insurances built in, but double check to make sure you've got that coverage. But if you are self-employed, if you started a business, it would be something really important to look at, because at the end of the day, that business that you're running, you're relying on that income. And if all of a sudden something happens to you and you can't fulfill your duties to keep your business going, that's going to put you in a really, really difficult financial position. So I think it becomes more critical for those business owners and those self-employed who don't have those benefits to them, to really seek that out and get that in place as soon as possible, because it will be cheaper the sooner you get it than waiting on that. So we'll move on to our sort of final topic, just a quick brief discussion on the market outlook, what's happening. We're 2 days away from 1 month since the inauguration of Donald Trump. And I guess we haven't been lacking news headlines since he has been
That's
come
a
to
very
office.
kind way of putting it, Brad.
Yeah. Yeah. So I don't know. I just hear the word tariff every day now. It's kind of just become, a custom. Every morning having breakfast, you hear the word tariff, right? So
Yeah.
what's your thoughts, sort of, Joe and Courtney, on where we're at now with the state of the economy here 6-7 weeks into the new year, and what potentially these tariffs could mean for the Canadian and US economies?
Yeah, definitely have heard that term tariff and stuff, and those of you out there will know that I'm a bit of a Star Wars fanatic and enjoy that. And episode 1 was based on the trade wars that started everything there. So here we are with sort of trade wars again. And what it's doing to the markets is uncertainty, right? And we're getting lots of uncertainty, because are they on? Are they off? Are they 10? Are they 20%? Which products? Obviously, companies are trying to get prepared for this. I think that's the important thing. They're trying to get prepared for this. Whether it actually pans out to actually be tariffs implemented, or is this a strategy that Mr. Trump is just implementing in order to open up the free trade agreement, which is his goal? That's my feeling. We don't know. So it's a wait and see sort of a situation. Courtney?
I'm more of the opinion that he's doing this to try to raise money because they have so much debt, and I think he's trying to strategize to find some way to help get them out, because that'll make him a big hero. Look, Trump got us, this much of our debt gone. I mean, we've done trade tariffs like way back when, and we stopped them because they weren't working, and there was better ways of doing things. So I don't think it's great for the economy, because it'll stop countries from trading with each other. And let's face it, there's no country that has everything that they could possibly need for their population. It doesn't exist. So I don't know. I'm flummoxed, to be perfectly honest. Like, this doesn't quite make sense to me, and how this is going to help their economy overall. But they can do it. They're allowed to do it. So
yeah,
we'll see. That you have to expect other countries to react.
Yeah,
and I think this is going to end up opening our economy to others. Like, we've been so focused on trading with the Americans. They're so close. We're good. We have been good allies for generations. But, if they're not going to play nice, we can go somewhere else.
Mm-hmm. Yeah, no, I think it's definitely opened up, I think, the eyes of a lot of countries of okay, what can we do without the US on? Because if they're going to be a pain to deal with, can we source stuff elsewhere, right? And I think that's where, or even internally, right? Like I know Canada's looked at, well, can we source stuff internally? Well, that's going to be a big discussion point. I think the biggest issue with Canada is logistics of transportation of a lot of goods and services and whatnot. But yeah, I think it's a big wait and see game at this stage. It's a lot of talk and very little implementation at this point. So it's we really have to see once those March and February, late February deadlines sort of come creeping up of where we stand. So I think next month we'll have a bit more of a clear picture of, unless he's kick the can down the road another 30 days. But we might have a clearer picture of where we stand with regarding the future outlook of the economy with or without tariffs.
And we have to remember that Trump is a lot of talk, so that he likes to talk. So, how this will affect the economy and companies, we'll have to see.
Yeah. So we'll wrap up this podcast with Joe, your tip of the month for February.
Just kind of following along with our theme here in terms of the disability and the critical illness. I think it plays an important part of your overall financial planning. I think you should have some discussions with your financial planner with reference to it. See what coverage you do have through a group plan. See whether or not it makes sense to have standalone coverage. Obviously, it costs money. It bites into the cash flow, so that there's that sort of a consideration. But I think you should have that discussion and determine how to manage that risk within your financial planning.
That's great. Great tip of the month. And thank you to everyone who is tuning in regularly to our podcast. If you're a first-time listener, thanks for checking us out. Make sure to subscribe on whatever platform you're subscribed on, and stay tuned for our monthly episodes. We'll be back next month. See you then.